It's fair to say that most business owners are not excited to talk or even think about tax. Tax can be a major business expense, but can also be complicated to understand and manage. In recent years, the tax environment has evolved for various reasons. First, public information. A lot of tax information is in the public domain, meaning anyone can investigate how a business approaches tax. There are high-profile examples of the reputation and values of organizations being challenged based on how tax is managed. Second, tax reforms. There's a lot of talk of tax reforms. In many cases, the implications and timing are uncertain, but who needs more uncertainty when running a business? Third, tax hikes. There is also talk of increased tax as governments try to fund economic recovery. Again, more uncertainty. So, what can business leaders do? It's sensible to stick to some basic tax planning strategies to reduce or defer taxable income in legal ways. Here are some common strategies which apply to most businesses in most jurisdictions. Be sure to test these out with your accountant before taking action. Review business structures. The entities formed during the life cycle of your business may no longer be effective due to changes in business circumstances, personal affairs, or regulations. An annual structural review often yields some tax opportunities. Look for tax deductions related to business purchases. In most regions, governments are trying to stimulate investment. For example, your business may be able to obtain a tax deduction for buying a new plant and equipment. Understanding these opportunities early will help you to plan. Home office deductions. More taxpayers are working regularly from home. In most jurisdictions, the regulators have acknowledged this and have set rules which may enable you to claim certain deductions for home office expenses. Prepaying expenses. You may be able to claim a tax deduction for prepayments made for a certain period, often 12 months after the end of the financial year. This is worth considering because it accelerates the timing of the tax deduction, which usually would have to be claimed in the following financial year. Reviewing debtors. Writing off debt before the end of the financial period may allow you to claim a bad debt deduction. Deferring income. This is a common and simple strategy which may be permitted in certain circumstances. These are just a few of the possible tax planning strategies you might consider. The benefits of a good strategy can be significant, and it's best to start thinking about this early. Thanks for watching, and happy tax planning!